Weird and distracting, I think. And I can then share my screen. You're still in it.
Was I still in it?
Yeah.
This is gonna go an hour and a half, right?
Mm-hmm. Oh, I got the date wrong on here. I didn't change that. So, yeah, till 10:30 a.m. and this is April 2nd. What is today's date?
April 2nd.
And I got something here from, there's Brian. Let's see, what did Lissy say? I didn't receive a panelist link. I will join the normal link. You want to try to send it to her?
Who's it?
Lissy?
Okay. I'll just resend all the panelists.
Hi, Graham.
Morning, Colleen.
Do you want to join with video or no?
Just a second.
And I can kind of see your face, Brian.
Sorry, let me.
I know, right?
I can join with video now. My plan was not to have video during the actual webinar, though.
Okay. All right. That's fine. Good morning.
Morning.
I modified a few of the slides just because the first section is just for, in case people want to drop off, people that don't have employees. And so I put the elements of the pandemic unemployment assistance that would deal with people that were business owners that don't have employees but have had to close, up in slides 10 through 13. So, but what I am not clear about, and I've heard that there's a lot of confusion with ESD and Department of Labor, is whether or not the governor's stay home, stay healthy order will be considered a quarantine?
Sure, I think the best thing to do is not spend time on hypotheticals where we're still trying to figure this out. And so if people start to dive into questions like that, I think if we don't have a clear answer, that just to make sure that we're addressing where we do have clear answers and staying focused. This is what we know right now for you small businesses.
Right.
As soon as we receive this information, the clarification, we'll follow up. We'll include that in the next webinar to make sure that as this information comes to us, that we're a resource for you to provide the clarity there. Because it won't just be there, it'll be other areas too.
Yeah. And there is a good FAQ section that ESD created yesterday that's up on their website now. And so I've got that link here. And they're saying any of the pandemic unemployment assistance funding for people that previously would not have qualified for unemployment benefits will be addressed, and there'd be a system on ESD.gov mid-April to late April. So, but everyone would receive the back payments.
Right.
March 31st if they qualified on that date. Hi, Mark. Good morning.
Hey, good morning, guys.
Morning.
Just told Peggy's on there. Yeah. Oh, and Lissy.
Angie, Lissy.
Yeah, there's Lissy. Lissy, you're registered as Colleen McAleer.
Oh, really?
Yeah, Colleen, you got blonde all of a sudden.
All right.
Well, Angie's also calling McAleer too.
Angie's also Colleen McAleer, but you're on mute, Angie.
It's the blonde, brunette, and redhead version of Colleen.
Yes, like take your pick.
We show 34 participants right now. Sorry to jump in. I just want to make sure that this is all private right now until 10.
It's not. It's not.
Oh, so all 34 people can?
Yes.
Okay.
Yes.
All right.
Yeah, but when we load the recording, we will erase everything until we get started at 10 o'clock.
Okay. I just didn't know if that kicked off for everyone. Okay. Thank you.
Yeah. So I was thinking, guys, that what we could do if the three chamber directors, if you guys can keep an eye on the questions that are coming in, that people type in, that then when we get to the question section, so there's question sections at, after we go over the idle loans and highlight the pandemic unemployment assistance, there's a question section. I did email you guys slides so you could take a look, but there are, actually I can scroll through right here. This is, so we've got a question section, maybe at 10:25, and I'm not gonna be really, we won't key in on this really hard, but essentially what we'd be doing as far as timeframes, and so there's 3 different times for questions. And so if it's a business that, it's one of your employers or businesses that are one of your members, you can, kind of ask that question. I'm thinking we'll pretty much play it by ear.
So do we need to stay on camera, Colleen? Because I know the other day they didn't really want people on camera.
So the only people that can be on camera are the panelists.
Okay.
So other people cannot.
All right.
So we've got Brian Garrett, who's, if you don't know him, he's our chair of the EDC board. He's also a former CEO of a bank, and he's been a lender doing Sba loans for 35 years. So he really knows that system well and knows a lot of people that are in that 7A Paycheck Protection Program that are talking to the software people, the vendors, and SBA at the federal level right now. So has some good expertise in that arena. And then Graham Ralston, I don't know if you guys know him, but Graham tell them a little bit about yourself. He's an attorney. Works
Sure.
in PA.
Yes, and I used to work for the U.S. Department of Transportation in Washington, D.C. for 8 years, and I ran our national small business office, the Office of Small and Disadvantaged Business Utilization, where we focused a lot on government procurement contracting, and also we had our own finance program for small businesses and about 14 resource centers across the country that provided not only our financing, but also SBA financing. So I love this space. I've worked with a lot of EDCs, CDFIs, and this was my life for about 8 years.
So he's a great resource for us. And he's owner business advisors for some larger businesses. And of course, we've got some others, just making sure you guys know who our business advisors are there. And we're trying to key in certain people to certain types of businesses, like Karen Affeld is going to take questions and concerns. Anytime we get questions from a farmer, I'm referring those to Karen because she's going to, be the expert in that arena. I'm hearing some feedback. And then Mike Rykoff, of course, Mike Skinner and Rick, they are primarily focused on micro enterprises. Mark Hanna is a SCORE counselor. You guys know him, I'm sure. Brian, like I said, is working with a bunch of the lenders and anyone who's interested in possibly being involved with the PPP loans. Graham and then Brian will be listening in, and of course there may be some Jefferson County businesses that join this, and so he is their point of contact, of course. So
I just want to check so you guys can hear me. I think it's really, yeah, there we go. Is that better?
That sounded good, Angie. Much better.
Okay. I have a bad microphone on my computer, so I'm trying to use my cell phone.
Yeah, no, it's working well.
Okay, good.
that's an interesting background you have, Angie.
It was the cover of our annual report this year. It's a photograph by Isaac Gauchi. He took it with a drone, and it's downtown Sequim.
Do you guys have any questions? And Lissy, are you connecting with any of the Clallam-based CQ business owners?
I've talked to Rob from the Lost Resort, but I have some chamber members up there, but I haven't heard from any of them specifically.
Okay, I'm gonna try to reach out to them.
So there's a Sequim logo, Angie, also on here. Is there somebody else from your chamber that's also on? Oh, you're on mute still.
That's probably my cell phone.
Oh, right.
I hit it.
But I mean, there's you, and then there's another person still called Colleen McAleer with the Sequim chamber logo.
I think I just hit it. It should be gone.
So you have, so that's your, what that is. Oh, I get it now. That's your audio.
Yeah.
That's your audio. Got it.
Did we lose Graham?
No, I'm here.
Okay, good.
His video's turned off. So,
Okay.
as is Brian's and Peggy's. Yeah, they're there.
So we have 89 participants so far. 90. We'll get going here in just a few minutes. We had about 200 people register, so we're up to 110 now that have joined us.
Do you want us to mute ourselves, Colleen?
If there's background noise, yes, but if not,
Well, there's like helicopters landing behind me or something.
okay.
You should be familiar with that noise.
Okay. You guys want to kick it off?
Sure.
Sound good? Okay. So hello, everyone. Welcome to the webinar that's being hosted by the Sequim Chamber, the Port Angeles Chamber of Commerce, the Forks Chamber of Commerce, the EDC, and we've got two different experts that will be our panelists as well. That's Graham Ralston, who has a strong background in small business law and from the federal level, and also Brian Garrett, who has 35 years of SBA lending experience and is also the chair of the EDC board. So a few quick items. If you scroll to the top of your screen, you should see a Q&A button, and if you click on that, you can ask questions. And we have 3 different question section periods where we'll be asking those questions, and our experts and I will try to answer them for you. Okay. Again, here's our presenters. The three chamber directors, Graham and Brian, and myself. So of course, a disclaimer. Webinar is provided for general information and educational purposes only and doesn't constitute legal or professional advice. Information provided does not fully address the complexity of the issues or steps businesses must take under applicable laws. No viewer should act on the basis of any information provided without first obtaining proper legal or other professional advice specific to their situation. It is provided solely for informational and educational purposes. And there's a First Federal logo there because First Fed's attorney, Chris Riffle, provided many of the slides on the FMLA and Emergency Paid Sick Leave Act that we have included it towards the end. So, quick overview. These policies are in the process of being developed. Some things we know and other things we don't know yet. And they are being developed because we've got, of course, the law that existed prior to the COVID-19 crisis and state policy, but then the governor declared an emergency, which created new policy. And then on March 17th, the federal government passed the Federal Families First Coronavirus Response Act. And then on March 27th, last Friday, the federal government passed the $2.2 trillion Federal CARES Act, which created new laws as well. So trying to mesh all those together is quite a challenge. And Employment Security Department, Department of L&I, they're all working on new policies so we can understand how they mesh with our particular state policies. So just to let all you know, these are our pro bono business advisors that are available to help. Many of them are on this webinar right now, and we are going to post these. We'll have a recording of this webinar up on the website chooseclallamfirst.com, and I'm guessing our chamber directors may post this webinar as well on their sites. And we will have these slides available. So you will be able to access any of these business advisors. We've got some that specialize in particular areas like the Center for Inclusive Entrepreneurship. Mike and Rick help out primarily micro enterprises, so single sole proprietors, and if you have 1 or 2 employees. Karen Affeld is our expert for farmers. Brian Garrett is our expert with lenders. Graham is supporting primarily larger employers. And then I am helping just about any, and then referring to a particular small business advisor. And Brian Koo, our partner over in Jefferson County, is doing the same for Jefferson County businesses. So here's our agenda. We tried to segment it into 2 parts. One is for all business owners, where we'll cover items that may be of interest of either larger businesses with employers or just sole proprietors or independent contractors. And then the second part will be for businesses with employees or those that have high monthly payroll costs. And then we'll do a brief overview of FMLA and the emergency paid sick leave issues, but we've got a lot of slides there. That's very complex depending on your particular business's situation. So in those cases, we have slides available for you, but you really need to refer to a business advisor to have them work out with you your particular questions. So we'll move into the first part, which is for sole proprietors, independent contractors, but then also it might apply to any employers. We did it this way so that if you're a sole proprietor, you could fall off the webinar after we get to section 2, because that's primarily for employers that have employees. So quick overview on this. There are 2 big loan programs. There are more than 2, but these were the 2 that we're highlighting in this presentation. 2 loan programs for you to consider. One is the Economic Injury Disaster Loan, and another is the Paycheck Protection Program, a new type of small business loan under the 7A Small Business Act. Now, there's also emergency grants that that are within the process of the Economic Injury Disaster Loan application. And we're gonna get to that here. The 7A PPP, which is the Paycheck Protection Program, works best for taxpayers with higher payroll, especially if they're gonna use the proceeds to fund payroll costs over the 8 weeks following the date that you make the loan. And there's a link there at the bottom if you wanna see the actual CARES Act. It's 882 pages long, but if you want to go to that and read the law for yourself, this will be up on our website, and you can click on that link and get to the actual act document. So here goes. First, let's go into the EIDL loans and emergency grants. The federal government expanded the availability and absolutely streamlined the application process. For those of you that applied for a loan a few weeks ago, there were all sorts of forms you had to fill out and provide lots of documentation, and now it is as simple as can be. It's basically based upon the last tax return you filed, and part of that is in the last, in the very last screen that you get to, there's a question that says, would you like the $10,000 advance? And if you click on that, then you can receive the emergency grant of $10,000. We did create a quick YouTube video on it, and there's the link there for that. And the next is who qualifies: a business with not more than 500 employees, and which includes any individual operating as a sole proprietorship or without employees, or an independent contractor, and also private nonprofits. So to me, there's still a question though, whether or not, I know 501c3s qualify for that, but the guidance we've received from our congressional delegation is 501c4s and c6s do not qualify. But more to come on that. Idle loans. So the requirements are basically that you had to be in business as of January 31st of this year. And they look at the credit score of the applicant, or an appropriate method of establishing the borrower's ability to repay the loan. Well, and it is much easier now to get a loan. You don't have to provide a personal guarantee if it's under $200,000. The maximum you can borrow is $2 million. The interest rate is 3.75% for a for-profit business, and a nonprofit is 2.75%. The maximum term is 15 to 30 years, and you can defer your payment up from 6 to 12 months. And SBA would work with you on that after you apply through sba.gov. What can the loans be used for? I think the biggest item is the bottom bullet, and that's repaying obligations that cannot be met due to revenue loss. But it also can go towards providing paid sick leave, maintaining payroll to retain employees during business disruptions or substantial slowdowns, making rent and mortgage payments. Idle loan advance. So this is the emergency grants section of the federal law, and applicants may request an emergency grant directly from the SBA of up to $10,000. Advances are considered grants rather than loans. They're not subject to repayment, even if the loan later is denied. Several people have said, well, I only want to borrow $10,000. And so which would then be a grant. So when the SBA contacts you afterwards, presumably you can respond to them saying, no, I just wanted to borrow $10,000 and thank you for the grant. And these advances are committed to be provided within 3 days after the SBA receives the loan application. If an idle recipient later refinances into a SBA 7A Paycheck Protection Program loan, which we'll cover in the next section, the grant would be offset against any payroll-related loan forgiveness that you receive. Applicants with immediate financing needs may consider applying for an idle first, then seek to refinance with an SBA 7A Paycheck Protection Program loan. So I'm going to go over just a few more slides here, and then we'll get to questions. So there's a new section called the Pandemic Unemployment Assistance. So Graham, do you want to cover this section, and I'll go ahead and.
Yes.
Great.
Yeah. Thank you, Colleen. So the Pandemic Unemployment Assistance section, you'll see detailed coverage for individuals who may be covered underneath this unemployment assistance. This is not a complete list, but I want you to think broadly that if your job or your employment condition has been affected by COVID, that if you meet one of these conditions, that means that you may be able to claim this pandemic unemployment assistance. Some quick examples is that your place of employment is closed as a direct result of COVID. You cannot reach your place of employment because of quarantine, or because someone else is sick in your family, or you're the main household or breadwinner and your loved one has passed away. So this is a partial list of what you may be eligible for. If you think that you may be eligible for one of these, or you still have questions, please feel free to email me directly outside of the webinar, and we can work through whether or not you would be eligible. And a little bit more, Colleen, if you go to the next slide, please, is that this pandemic unemployment insurance adds an additional $600 per week from March 31st through July 1st with a max of approximately $10,500, and that the Employment Security Department will have the program set up in around mid to late April. So if you go to their website right now, if you're not already eligible for unemployment, the system isn't properly set up for those that are seeking this specific pandemic unemployment assistance. Colleen did include a link on this PowerPoint so that after she uploads this presentation, you will be able to come back here and use that link to go through some of the FAQs or seek additional information as you need related to pandemic unemployment assistance.
Okay. Mark and Lissy and Angie, do you want to read off any of the questions that are there, or do you have any yourself?
We had a question in the very beginning from Trev Colson, if there was assistance for sole proprietors, and I think we reviewed that, that the idle loans do apply to sole proprietors. So I think that answers his question. And Colleen Robinson from Habitat for Humanity asked if we had a specialist for nonprofits, and I told her we would follow up on that.
Yes, I have been helping nonprofits. Typically, I was going to ask Mark Hanna about this, if SCORE, which is supported through the Small Business Administration, typically does not work with nonprofits, but I am, and I know Christy Smith is becoming an expert as well on nonprofit issues. So we will definitely, either Brian Koo, if you're in Jefferson, or I will help directly with nonprofits.
I have a question. This is Lissy. Joey Roberts wants to know, since there is a freeze on evictions, can a landlord get assistance for rent loss?
I believe that if he is a business owner, if the landlord has filed his last tax return as a business owner, then that should apply. Do you think that's right, Graham?
For it's interesting. Yes, if it's just a pass through, I think that and this is part of where we're still figuring things out. But if it's just a pass through entity and they're not paying themselves any payroll tax as part of the distribution, let's say from the LLC to themselves as rental income, I don't know if that's going to classify necessarily for landlords for the payroll forgiveness. They might be able to apply for the grant, but not be able to apply for the actual forgiveness of the loan. And that kind of ties into, I see an S Corp as a sole shareholder question, where if you're the employee of, or if you're paying yourself a reasonable salary as part of that S Corp, then yes, you're going to qualify. But I've had an interesting question pop up this morning that what happens if you're the sole shareholder of the S Corp and you're not actually involved in the business and you're just receiving dividends? Well, in that case, you're not actually paying any payroll taxes. And the way that I've read this is that you would not be eligible for the payroll forgiveness, because the intent behind the policymakers on this is trying to compensate people that are already paying into the payroll assistance or payroll tax system.
I want to make a comment that there's a lot of good information going on in the chat as well. So for the people listening to the webinar to also check the chat as they're listening to the webinar as well. So
Great. And I think we can post the chat comments as well on the website.
great.
Okay, we ready to move on?
Do we want to go through, there's several questions in the Q&A portion.
Okay,
Do we want to go over those now?
yes.
So I believe we answered the first question that's in the Q&A list. That was, I'm S Corp as a sole shareholder. Can I collect unemployment under the new act? Am I eligible for the payroll protection program? Did we answer that one already?
I didn't
I think
answer
we
that they would be eligible potentially as long as they're receiving, as long as they're paying themselves a salary as the S Corp, yes, they're eligible for the payroll protection program, but you're not going to be able to do the unemployment and the payroll protection program at the same time.
All right, there's another question. Does the payroll relief fund work if all employees are on unemployment since the business is closed temporarily?
Do you want me to jump in, Colleen?
Please, yes.
Okay. So once the business is reopened, so you could have employees that are currently unemployed right now, but the idea is that once you receive if you're talking about the payroll protection, Paycheck protection program, then once it's reopened or once you become eligible and you're issued a loan, the idea is that then you rehire those employees that are currently unemployed and your payroll expenses are forgiven underneath that loan.
The next question in the Q&A is, where are options for farmers who need grants to support their shift in marketing? No longer options for farm stand or local market pickup. Need vehicle for direct delivery to customers.
So again, Karen Affeld is going to be our expert on farmers. We're identifying that as we're learning more about the CARES Act and the funding that has come through, we are not yet finding resources that we would expect for farmers. And so because of that, the state funds that we have available that are coming to Clallam County through the community development block grants and through the governor's strategic reserve fund that should be announced today, the Working Washington Small Business Emergency Grants, we are looking at focusing those funds for farmers because there are other resources for entities that are not farmers. So there's more to come on that. Again, I believe the governor will make an announcement about his program, and the Clallam EDC will be the resource for people to apply to, but it's not very much money, unfortunately. And so, but we are recognizing that we need to ensure that each type of business entity throughout our counties need to be supported. So we're addressing those kind of issues.
The next question in the Q&A is from Mike Skinner, who asks, would Airbnb owners be considered gig economy workers similar to Lyft or Uber drivers?
I'll let you take that, Graham.
Thank you. I would think that when it comes to cleaning the Airbnb units and those cleaning fees, that would be considered a yes. But as far as owning the property as a pass-through, that's where we get into a little bit more of that gray area about the question earlier about a landlord and it being treated as rental income on your tax statement rather than actual earned income that you're paying payroll tax on. So it might be figured into how are you characterizing your engagement with Airbnb And are you just as a pass-through entity rental, or are you the one cleaning it as well and collecting those cleaning charges? I haven't seen clear guidance, but I have seen a lot of questions on Airbnb. And I'm also curious on what the exact treatment will be for that.
So this is Mark. I just want to just chime in and say that I know Airbnb also has grant programs for hosts that are available. And if you're an Airbnb proprietor, you should just go to their, to your account, and there should be information there to apply for. I believe it's 25% of lost income and cancellations during this particular time period. So there's that also to help out the Airbnb owners.
Great. Thanks, Mark.
Colleen?
Yes.
Yeah, this is Brian. On the Airbnb question, the answer might be if how they're characterizing it on their tax returns. I know several Airbnb who have multiple properties and carry it as a separate schedule on their for their taxes, and that might, from my standpoint, would qualify for
Oh, we lost you, Brian. Well, do we go to the next question?
Sure. The next question is from Tommy Ferris, and it is, in terms of the timing for the EIDL grant, when can I expect to hear from the SBA? I would rather do the EIDL grant versus the PPP program, but don't know how long I'll have to wait for the funds and application decision.
So if you're looking, if Tommy's just looking for $10,000, the commitment from the SBA currently is that it's supposed to arrive into your checking account within 3 days. I know some people that applied on Monday. They, of course, haven't received any funds yet, not that I know of. But if you're looking for funding beyond that, the expectation is you should be receiving an email from the SBA. Graham, do you know of any entities, or do any of you know of any people that have applied and have received that response from the SBA yet from the new process that rolled out on Monday?
Not yet, no.
I don't either.
Neither have I. I haven't heard of any, but I know of several who applied since Monday, and starting on Monday as well. And no emails, no response, crickets basically so far.
Same boat.
Okay.
The next question is from Jack Heckman. Do employees we have on the work share program qualify for the $600 per month?
So that is more complex of a question, and there are some slides towards the end of this presentation on that. Graham, do you want to address it at all, or do you want to just do an individual business advising session?
Yes, Mark, go ahead and shoot me a private email and we'll answer that offline.
Okay.
The next question is from Aaron Staben, and I think we possibly answered this. Do we know their turnaround for an EIDL loan before funds are available? The answer is it's supposed to be 3 days, but right now we'll see. The next question is Beth Loveridge. Do you have to apply for the EIDL loan and the advance if you just want the $10,000 advance?
The answer to that is yes. That is the process that they're using. Is you can't just apply for the grant. You go through the process for the loan. You check the box saying that you want the advance, and then when they contact you, presumably you just say, no, I just wanted the $10,000 grant, and then that's the end of the process. But we haven't heard back from them. We just know what the federal statute says, and that whole section is called emergency grant, and that's how the SBA has rolled it out. We've been exchanging emails with the SBA, Kathy Griffith and others from the Seattle office, and that's what they have recommended for us to share with the businesses in Clallam and Jefferson counties.
The next question is, I'm unclear on how to apply for the Payroll Protection Act or Protection Plan. Is that something we're going to go over later?
Yes, yes.
Yeah.
That's the next section.
Yeah. The next question after that is from Melissa Williams. Is there a list of local lenders who are prepared to accept the PPP loan applications? I'm hearing that the SBA is advising funds will go quickly and we want to be ready to jump on our application.
I'll let Brian take that. Brian?
Yep. Can you hear me?
Yep.
Okay. I had to unmute. The local banks some have been approved. I know Kitsap is a preferred lender and is gearing up right now for an online application given the volume that they expect. I can't speak to First Fed and I can't speak to Sound. They, to the best of my knowledge, were not approved lenders prior to this. But I also hear from the SBA that they will give a waiver to just about all the banks so that they can become lenders for SBA. That has yet to be finalized. So everything that we hear on the final of the program is supposedly going to be published tomorrow, Friday.
And our business advisors are collecting that list for you, so they will be able to provide you information, and we'll post it on our website, what lenders will be offering these Paycheck Protection Program loans. And we'll have a section on that on our website as soon as that is determined. We have been communicating with First Federal, Sound, Kitsap, KeyBank. They're all reviewing it and waiting for the final requirements and information from the SBA that's to be published tomorrow.
Okay, we have one more question.
It's not
Okay.
a Zoom meeting without a dog barking.
That's right, or a kid walking in the background.
Okay, that's the FedEx truck. So there's one last question in the chat or in the Q&A section. It's from Sheila Everett. For small nonprofits who only need payroll help for a couple employees for a couple months, would the 10K EIDL make more sense than applying through the PPP?
So we're going to get to that here shortly. It's, I think, a fair rule of thumb is if your monthly average payroll, and there's all sorts of complications to this, but if your average monthly payroll is $4,000 or more, you likely are better off doing the Paycheck Protection Program because you get more funding for free as a grant, basically, or they call it a forgiven loan. But there are all sorts of caveats to that we will go over here shortly. If you need the money immediately, then you can get the EIDL grant, and then once that is closed out with the SBA, then you can apply for the Paycheck Protection Program, but you can't have both processes going at once. And we don't know how long it's going to take for the SBA to close out after they give you the advance, we don't know how long it'll take them to close out your application with them so that you could then start over with the Paycheck Protection Program. So that is a potential risk. Okay. Are we done with, oh, go ahead.
I just scrolled down to the bottom and there's one more from Tommy. I think we've kind of answered parts of it, but can I apply for both the PPP and the EIDL grant and choose which assistance I want? Since I haven't received any information from SBA for the EIDL grant, I don't want to miss out on the PPP if I don't get the grant.
Sure. So the process there is that you can apply for the EIDL loan, which the first $10,000 is a grant. And then if Then you can later apply for the Paycheck Protection Program that will roll out in a few weeks, presumably. But you cannot apply for that until the SBA has closed out if the fact that you do not have a loan in process with them on the EIDL grant side. If you receive some funding from the Paycheck Protection Program, the amount that you receive that is forgiven, they'll subtract $10,000 from that if you have received $10,000 from the EIDL loan. So let's go to the next slide then, if we're ready. And this is the beginning of the presentation segment for businesses with employers. So folks that don't have any employees, we've hopefully covered the items that will be most impactful to you. And we're gonna go into the 7A Paycheck Protection Loan that's to keep businesses open and employees paid. So unlike the EIDL loans, where you go right to sba.gov to apply, the 7A loans are originated by approved lenders and they're guaranteed by the SBA. So that means you're going to apply with one of the many lenders that will be offering this type of loan. The CARES Act, and it's part of a 7A loan. The SBA, you've probably heard of SBA loans in the past for small businesses. There's different programs, a 504 and the 7A. 7A is for basically funding for operating capital. And this is a new element of that. And it's addressing business disruption caused by the COVID-19. And the intent is to enable eligible businesses to retain their employees. So most small businesses in operation on February 15th of 2020 will be eligible for this type of loan, or that then at the end is forgiven. So, and these types are much better than the traditional 7A loan. First of all, they're 100% federally guaranteed, which means there's no risk to the banks. And other 7A loans were not 100% federally guaranteed. So that means that the bank took some risk in case they were never paid back. Congress appropriated $349 billion for these SBA loan guarantees. So what's required? You have to have been operational on February 15th, and you must be able to show you had employees that you paid a salary and payroll taxes to or show that you were paying independent contractors. So what's not required compared to a traditional loan? There's no personal guarantee requirement and there's no collateral requirements. An applicant needs to, they do not have to establish that they were unable to obtain credit via traditional lending channel, which was the case with other type of 7A loans and the prior EIDL loan that people applied to a couple weeks ago. The 7A Paycheck Protection Program lenders will not even evaluate your repayment ability. So who's eligible for these? It's not just the traditional small business concerns that have fewer than 500 employees, but it's also 501c3 nonprofits, 501c19 veterans organization, tribal concerns, or individuals who operate a sole proprietorship or as an independent contractor, and certain self-employed individuals. So to receive a Paycheck Protection Program loan, you have to certify that the loan is necessary to continue operations due to the current economic circumstances, and you need to acknowledge that the funds will be used to retain workers and maintain payroll or make mortgage payments, lease payments, and utility payments, and that you do not have other covered loan applications pending for similar purposes. So that's where that last bullet is why we've been saying that you cannot apply for this until you have the idle loan application has been closed out by the SBA. How can I use the proceeds of the loan? So you can use the funds to pay for payroll costs, all right? And what are payroll costs? That's virtually all compensation paid to service providers. So whether it's your employees, independent contractors, whether you're paying them in a salary, a commission, or similar compensation, including tips, vacation pay, family or sick leave. And it also includes all state taxes and severance pay. It also includes health benefits and retirement benefits, interest payments on pre-existing loans, rent, and utilities. Now, you have to ignore the amounts that exceed $100,000 per year for any person, but you don't have to take into account the payroll taxes that are imposed on the employer or withheld from the employee. So that's how you can spend the money. So, and do payroll costs include paying myself? And the answer to that is yes, if it includes compensation or income of a sole proprietor or independent contractor that is your own wage or wage you might be paying to a family member. It includes a commission or income or net earnings from self-employment. And again, though, that's capped at $100,000 prorated for the covered period. So what's the maximum that you can borrow? How you calculate that is it's the amount equal to 1 month of payroll costs, which we covered previously, subject to the $100,000 cap per employee, and on a trailing 12-month average basis, multiplied by 2.5 times, or 10 million. But I'll put big money on the fact that we're not talking, no one here has a payroll amount that would cover, be more than $10 million. So as an example, assume you're applying for a payroll protection loan and you work with the lender and you sign off on that and receive the funds on May 1st. And so your business has an average monthly payroll and you're looking at the prior 12 months, so May 1st of 2019 to April 30th of 2020. And so what was the average monthly amount of the total payroll cost? Let's say that's $20,000. Then the maximum loan amount that you could get is $45,000. And then we do, for your use, we do have under our Clallam, chooseclallamfirst.com webinars link, we do have a calculator there that we, from a different law firm that, I think it was Lane Powell that had created that, and you can use their calculator there to determine what your amount would be that you can borrow, the maximum amount. And then what are the terms? Now this whoops, go back. There we go. Interest rate. So they first came out, in the law, it says it's capped at 4%, but just recently, there was yesterday, I think it was, we received from Congressman Kilmer a Treasury press release that said that these PPPs were going to be capped at not capped, but they would be 0.5%. The federal statute says they'll be capped at 4%. And then maximum term of maturity, according to the law, it's 10 years. But again, the Treasury said 2 years. So we're waiting to find out what that guidance will be tomorrow when the SBA comes forward with their details. There are no prepayment penalties and no loan fees payable to the borrower. So, I mean, that's really huge. This is a lot of funds that could help out a lot of businesses, keep their employees on. And you'll see in the next slide that there will be loan forgiveness. There's principal and interest payments are deferred for at least 6 months, but not more than a year. But you've got to consider that interest will continue to accrue during the deferral period. Presumably, some lenders will offer a full year of deferral, whereas others may offer only 6 months. The PPP loans can also include the outstanding amount of an EIDL grant or loan made between January 31st, 2020 and the date of which such loan may be refinanced with the PPP loan. But wait, there's more, the forgiveness element of it. These PPP loans are eligible for forgiveness, and that amount forgiven is excluded from the gross income on your taxes. Most employers should qualify for forgiveness of loan principal up to the amount paid by the business during the 8-week period after the loan is made for the following operational expenditures. So again, if you borrow the money and you close out the loan and receive the money on May 1st, then and if you spend money in these 3 areas for the next 8 weeks, then you will not have to pay that back. And so that's for qualifying payroll costs, any interest payment on any mortgage, including mortgages on personal property, and covered rent and covered utilities, as in power, water, transportation, telephone, and internet. So, but in each case, you must show your lender documentation to prove those obligations existed prior to February 15th. And then the SBA pays the lender for an amount that was forgiven. The amount of the loan is subject to forgiveness, may be reduced, however, if the employees are terminated during the covered period. So that's the 8 weeks after you make the loan, or if you reduce if the compensation is reduced by more than 25%. So again, this is about trying to keep your employees on and not having them go into, not laying them off. The Clallam EDC, again, we have that spreadsheet on the Clallam Choose Clallam First website to help businesses compute the maximum amount of their Paycheck Protection Program loans and the amount of anticipated forgiveness. So who to contact, this actually isn't really correct right here. Thus far, we know these banks will provide the loans. These banks are First Fed, Sound Community, Kitsap, KeyBank, and First Security. I know are evaluating this as we speak, and they're waiting for more guidance tomorrow, but I know they're actively looking at it.
There are more too. I mean, there's some others. So,
yeah, absolutely. Those are the ones we've communicated with when I made these slides. Those are the ones that we had communicated with thus far. But yeah, Mark's absolutely right. There are others that will be offering it as well. And so lenders are compensated by a percentage of the loan size on the sliding scale from 5% of loans under $350,000 to 1% of loans on loans over $2 million. So I think now is a good time for questions and hopefully some answers.
I went through the chat just to scrub for a couple clarifying questions.
Okay.
The first one was a question, can you refinance an EIDL into a PPP loan?
And the answer to that is yes.
Yes. Someone asked the difference in a PPP and pandemic unemployment insurance.
Insurance, I think they meant assistance. So the pandemic unemployment assistance is that $600 of additional money that will come from Employment Security Department. So that pandemic unemployment assistance is $600, comes from ESD. This would come from SBA or from an approved lender of the SBA for a loan amount. So they're two different programs entirely.
And then the last one that I scrubbed from the chat was, does the PPP cover federal payroll taxes? And I believe the answer is no.
Oh, no.
Oh, it does.
So federal payroll taxes, yes, it does. So it's payroll, it does.
Okay.
Colleen, my belief is that it covers state and local, but the federal tax, the actual tax, it covers payroll costs that are subject to federal tax, but it doesn't cover the actual federal tax. IRS, and this is from the SBA Senate committee that says that IRS, I believe it's provision 20, 21, and 24, which notifies the different tax code on the payroll tax, is not included in this calculation.
Okay, great. Thank you. Thanks for that correction. I appreciate that.
Yep.
Don't want to give any incorrect answers here.
All right, and then we can hop back in the Q&A queue. The first question is, if my restaurant remains open with a drop in sales and have to lay off employees, am I qualified for the grant?
Yes.
Yes.
Yeah, go ahead, Graham.
Yeah, and I love this question as a restaurant owner because there's a couple businesses that I'm working with where this could apply more than just to your restaurant and other businesses. That when Colleen was mentioning the forgiveness period starts at the origination date of that loan. So if that's not until May 1st, restaurants may be closed through the month of April. So it may be more advantageous for you to allow those employees to stay on unemployment and have your loan originate May 1st if the lender is willing, and as long as we don't see any timeline requirements that after your application, banks or lenders have to originate that loan within 15 days. If you're able to have some flexibility on that origination of the loan date, you may want to actually push it back to maximize what your return would be as a business. This works by once a loan is processed and it goes back to DC and the SBA approves it, it's now committed as part of the total funds that are available for this program. So you could essentially save your spot in line, and then it's up to the lender, at least right now without any timeline guidance, that they could potentially originate this loan a month down the road or 2 months down the road, as long as it's before June 30th, 2020. And if you look at some of those dates, you really might be able to maximize the return, not only for your employees, but for the growth of your business going forward.
That's great, Graham.
All right, the next question and answer is the PPP doc from the U.S. Chamber of Commerce defines payroll to include net earnings from self-employment. Can you speak to how that may apply to small businesses without external employees?
Sure. So if you're an LLC owner and you have net profit or net earnings coming in, you're going to be making payroll tax payments on those net earnings. So you would use that as part of your calculation, and maybe you're not paying yourself out or taking exact distributions as an LLC on a monthly basis, but it's about averaging what that distribution or those net earnings would have been throughout the entire year and what you were actually paying tax on for your net earnings for that calendar year. Let's say though that you had net earnings of $200,000, you will be capped at a compensation level of $100,000 as an owner. So you're going to prorate that $100,000 over the entire 12-month period and then do a 2.5 times X on that to come up with what your payroll loan would be. And then your net earnings, once again, underneath that loan would be forgiven for an 8-week period, not to exceed $100,000 compensation.
Okay, the next question in the Q&A is from Brooke Williams. We are a C Corp with 1 employee. Can we obtain help from one of these programs?
Yes, you can. But you would, the one employee is going to be your payroll costs that you're going to factor into this to figure out what your what your potential loan size is going to be. And if there's only one employee, you're going to also weigh out if that payroll cost is only $3,000 a month. Well, now you're doing 2.5 times that, and it comes out to $7,500. So you would be looking at the grant rather than the moving forward with a loan.
The next question's from Steve Rodman. Can we designate a rolling 12-month payroll cost since we reduced last month's payroll after closing because of COVID-19?
I think I understand the question. They're just asking if they're going to, if they can reduce, if they're paying less, then they'd have a lower payroll cost. Is that, so can you repeat that again, Angie?
All right, it says, can we designate a rolling 12-month payroll cost since we reduced last month's payroll after closing because of COVID-19?
Yeah, absolutely. So what, if you apply first, as an example, if you have your loan origination date as May 1st, then you're going to be considering the last 12 months, which would include April and March, which would be a lower amount. And so that's the amount that you can get the loan amount on, but that's also what they're looking at is what you need to, what's that threshold in order to get 100% of the loan amount guaranteed as forgiveness.
Okay, the next question is from Beth. Did I understand from the previous section of the webinar that the owners of LLCs are eligible for unemployment assistance and that they have to wait to apply?
Yes, they could be eligible for unemployment assistance as long as they meet one of the covered individuals underneath those regs, which we listed some of those covered individuals, and that you're unable to still work under these current conditions, but you may be eligible.
The next question is, First Federal said they are not offering this yesterday. Has that changed?
They are waiting until the guidance comes out from the SBA. I've been texting with Matt Dinas, the CEO, and he said they absolutely are looking into it. They are waiting for more details on it that'll come out on Friday. So I don't think a final answer has been determined as of yet.
The next question is from Thomas. Will the PPP 7A apply even if employees are currently laid off?
Yes. So if you, again, going back to the scenario where if you apply, if your loan origination date is May 1st, if you bring them back on for the months of May and June, as Graham was explaining, you can, you look at the average payroll that you paid from May 1st, 2019 to April 30th, 2020. And as long as you bring them back on in May, that you can still apply and get that amount forgiven.
The next question, if we were required to close our business until May 18th and our employees are on unemployment, but we are still paying health benefits and will bring the staff back when the business reopens, does the loan cover the expenses for when we reopen and get back up to speed, covering cash flow for reopening?
So Graham, can you take that one?
Yes. Yeah. So let's say that your business is closed until May 18th and let's say we get into that scenario where the bank originates the loan on May 18th instead of May 1. So for the next 8 weeks, and let's say you're issued a $200,000 loan, okay? You would then have that cash flow to help get your operations going again. And in addition, let's say your payroll expense for the next 8 weeks is $150,000, and then your rent, utilities, et cetera, is $25,000. So you had $175,000 of eligible expenses in the 8-week period after May 18th. Those funds would be completely forgiven, assuming you submit the correct documentation back to your lender. And then you have a $25,000 gap between what's left over from that loan. That's what's potentially carried on at 0.5% interest rate for a 2-year term. And as Colleen mentioned, we're going to have final guidance on what that exact term may be, because the initial guidance was 10 years and a 4% interest rate. So I hope that answers your question.
All right, the next question is a clarifying question. The PPP amount loaned can only be 2.5 times payroll costs, even though it can be used for utility, rent, et cetera, as well, not 2.5 times total monthly operational costs.
That's correct. The 2.5 times a monthly cost is going to come out to 10 weeks. Okay, 2.5 times a month is 10 weeks. The forgiveness period is only 8 weeks. So you see that the payroll cost is being estimated over a 10-week period, and the difference between the 10-week and the 8-week period is that 2 weeks, and those 2 weeks are built in to then help cover utilities and rent and the gap in between the two. In addition, when you're looking at what can actually be forgiven, your rent and utilities are limited to 25% of those costs that will be forgiven. The intent behind these loans is really payroll. So payroll is the main driver here, 75% to 25% ratio. But when you're doing your calculation, it's payroll only.
All right, the next question is asking if where the PPP payroll calculation spreadsheet is on the Choose Clallam website.
So we'll make sure that that is, I saw it there previously, chooseclallamfirst.com/webinars, and it was a separate link there that you can download. I'll make sure it's there after we're done with this webinar.
The next question is the $10,000 grant taxed?
I didn't put this in this presentation. I don't believe it is. Grant, do you recall specifically? I know that the PPP loan forgiveness is not. Do you know if the $10,000 grant is taxed?
I don't believe it is.
I don't think it is either, but I just didn't include it here in this presentation.
All right, we have another question. I think we've answered this before. Are we still able to apply for the PPP if we've had to lay off employees? The answer is yes.
Correct.
And I just want to add one thing. There's really 3 things you're thinking about, 3 calculations that you're ought to be thinking about. Is number with the PPP loan. One is, how much money can I borrow? Another one is, how am I allowed to spend this money? And then the third is, how much of this amount will be forgiven? So I think that to me was a good way to frame it in when you decide what your path will be going forward.
Colleen, on the previous question about the PPP calculator on the Choose Clallam First website, the answer is it's located under the tab Business Resources, and they click on previous webinars PDFs, and on that page is your calculator for download.
Okay, thank you. And
Yep.
hopefully this link that is in this webinar and these slides that we'll put up, if you click on the link, it should take you to it and then download it as well. I hope that'll work.
The next question is, I am an employee of an S Corp and receive salary and bonuses. Would I be eligible? I assume that's for the unemployment.
So if, now, say that again, I'm a employee of an,
Employee of an S Corp and receive salary and bonuses. Would I be eligible? And I'm assuming that they meant for the unemployment insurance.
so if you're not an owner of it and you've been paying unemployment insurance, then you would have been able to receive unemployment benefits. And so if you're not an owner and you're just an employee of an S Corp, then yes, you would get to, and you're not receiving any salary anymore and have been laid off, then you'd get the normal unemployment benefits. Now, if you're an owner and have not been putting money into when you receive your salary and your bonuses and have not been taking out any unemployment insurance, then you would receive the $600 amount for if you qualify. You know, there was that list of questions. If you qualify, then you can receive the $600 per week from March 31st of this year till July 31st of this year. It's a 4-month period. And that won't roll out on the ESD website until mid-April to late April.
The next question is I'm referring to the SBA application saying that agricultural enterprise and farms are not eligible. And the question is, can you speak some more on what farmers can do for grants? And I think that you've answered that earlier in the presentation to contact Karen Affeld with the NODC. They're the experts on farms.
And we will be doing a webinar at some point just for farmers, as we are able to get more information about resources for our farmers and what they're eligible for and what they're not eligible for.
The next looks like it's a clarifying statement from Michael Reichhoff. The calculation looks at 12 months ending 1/31/2020. So I think that's in reference to a question that was asked earlier.
Mm-hmm.
Then the next question is, will these $10,000 grants be blankets, or will they be reduced if your loan needs are less than $10,000?
So if you say to the SBA that you want to borrow have a lower grant amount, then they will give you a lower amount.
I think we have another clarifying statement. Wells Fargo is one of the largest SBA lenders. Do you know if they're doing PPP loans?
Brian, do you want to answer that? I would guess that they will be doing them. I can't imagine that they won't, but they'll be providing more guidance on their website, I'm sure, after the SBA has their meetings on Friday. They give out their guidance Friday.
The next question is, can you direct me to information about which LLCs are and are not eligible for unemployment assistance?
It's not necessarily the LLC that's eligible. It's the individual working at the LLC when you're looking at covered employees. So I know, Colleen, on our pandemic unemployment insurance, that there's a link back to the Employment Security Department of the state of Washington, and there's additional information there, and also within our slides to see if you would be eligible a covered employee or covered individual for this unemployment assistance.
All right, the next question, does PPP cover cost of goods sold as operating expenses? And can outstanding debt be paid down, i.e. your credit card?
My understanding is no, it does not cover cost of goods sold as operating expenses, and that it cannot be used to cover outstanding debt. However, if those are needs for you, you should be looking at some of the other alternative 7A loans or SBA financing opportunities, which there are avenues for you to explore to help with those specific needs. But the PPP is designated to cover payroll costs and then specifically forgiveness for potential rent and utilities.
All right, and the last question in the Q&A queue is something that we have answered before, but essentially, do you have to apply for EIDL first, or can we go straight to PPP? Also, some of the questions on the applications are not user-friendly to nonprofits and are not geared to a board versus owners.
Yeah, you can definitely go straight to a PPP. You don't have to go through the EIDL process. And there are a lot of 501c3s that are applying for the $10,000. I know it really is going to go back to your last 990, and they'll look at that to make decisions on the kind of the amounts, etc., whether you're qualified, authorized. Brian, do you want to add anything there?
Can you hear me okay, Colleen? Yeah, you've been cutting in and out, so I've missed some of the question. Could you repeat it?
Oh, I just saw that you came back on. I think we got the answer there. It was just about that some of the EIDL question process for nonprofits, the how you fill that out is not very user-friendly, and it's not geared to board versus owners, but nonprofits can apply for the EIDL loan or grant.
Looks like we got another question in here. Do you interpret transportation costs listed as covered under the utility payments area included in the bill to include fleet fuel costs?
No.
Graham, what do you think?
I agree, no.
Okay.
Colin, before we move on, just to remind everybody, this is being recorded, and all of this meeting can be viewed again at the end, but can you remind everybody where they're going to be posted? You know, this link we posted to view this again after this is over?
Yes, it's chooseclallamfirst.com. And if you just plug in /webinars into the bar, you can get it that way, or you can go to business resources and then there's a webinar link that way. I will also try to get a link sent to everybody that registered for this so that they can get it directly.
Okay.
Okay, we're going to move on then to, this is just a brief overview. And we've got about 17 minutes left. And these are some really complex areas that really will need you to contact one of the business advisors to get some of these answers. But we just wanted to highlight some of this area for you so that you're aware that these are some things you should be thinking about if you have employees and you're laying them off, or if they are dealing with any employees that might have COVID-19 symptoms. So first, it's the Emergency and Family and Medical Leave Expansion Act. Generally speaking, that came from the Families First Coronavirus Response Act, and overall, and I'm not going to go into all these details, but there are so there's different benefits that that employees will receive under different circumstances, and you can read through these slides if you go download this information. And it, just so you know, the emergency FMLA does affect all private sector employers with fewer than 500 employees. So it will affect almost every employer in Clallam County. And let's see, I'm not going to go into details on this because it is pretty complex information. And then there's, yes.
Yeah, I think that you and Chris did an excellent job covering a lot of this information, and I'm happy that it's again in these slides. But I think you have that webinar posted to the site, correct? So
yes,
if people want a full breakdown from when you examined all that, they could always go back and reference that webinar where Chris and you specifically covered a lot of these issues, right?
Yep. Yes,
Okay.
he did a great job covering it.
Yeah.
And so you're totally right. That's a great resource. Okay. And so emergency paid sick leave, again, it's paid sick leave for all employees who are unable to work or telework. And so they need to take emergency sick leave. It provides an additional 80 hours that employees have to pay, capped at $511 per day or up to $5,110 in aggregate. And again, there's that webinar that goes over all the details here. So I'm not going to go over that now, but there are some good examples as well that you can look at. So we've got 3 examples there that Chris Riffle created. And so I want to spend a little bit of time on the expanded unemployment benefits that I'm going to ask Graham to review for you.
Sure. Okay, I'm off mute. So we covered a little bit of this already. So this as an extension is, you see that CARES provides an additional $600 per week to certain employees that are covered receiving unemployment insurance benefits, that there would be an additional $600 per week, which is referred to the federal pandemic unemployment compensation. The $600 is payable by the state to the individual, which would be reimbursed by the federal government. Covered individuals you see in quotes refers back to some of the slides that some of those members that we covered earlier in this presentation. Next slide, please. And there's 2 categories of eligible workers: those who are already eligible for unemployment benefits, and then those covered individuals who are workers that are not eligible for unemployment benefits. And this would include self-employed workers or independent contractors in the gig economy impacted by all things COVID. Really think about it broadly, and then if you have specific questions, we can always work to see if you are actually eligible. It's retroactively applying to January 27, 2020 and lasts until December 31st, 2020. Colleen did mention that the benefit does go though through March 31st to the end of July for the additional $600 per week. And instead of unemployment assistance going for the normal benefits of 26 weeks, the covered individuals will receive an additional 13 weeks for a total of 39 weeks. And this provides a little bit more information on who those covered individuals might be for this insurance. But you must note that a worker is not a covered individual if you are eligible to telework with pay, or you are receiving paid sick leave or other paid benefits. This would also include if your employer reopened and they're participating, for example, in the PPP loan that we've talked about, and they bring you back on payroll. So you would no longer then be part of this unemployed group if you don't meet one of these covered employees and you are able to go back to work. There is temporary financing of short-time compensation benefits through the federal government, so known as work share plans. I know we had a question on this earlier. Short-term compensation program allows for qualified employers to reduce work hours rather than laying them off completely. And some of those employees receive unemployment compensation benefits that are prorated for the partial work week reduction. May be eligible for 50% federal funding of unemployment insurance benefits paid under the program. And those are capped at 26 weeks. So you get into a little bit more complicated mathematic formula that I'd be happy to work out on an individual basis where this might be applicable for individual owners. Shared work week is a program that allows employers to reduce the hours of permanent and hourly paid employees by as much as 50%. And the employees can collect partial unemployment benefits to replace a portion of their lost wages. And while on the shared work program, employees are not required to make an active search for work, but you must participate in the program. Partial employment for the reduction in hours. If you're temporarily reducing hours of work for your full-time employees, they may be able to receive unemployment benefits without needing to look for work. And then in certain cases of standby, your employees may be eligible, meaning that they do not have to look for work, but need to be available for any work that you offer they can do if quarantined or isolated. And standby will be allowed for 12 weeks if you make your request in writing.
So this is something I just wanted to highlight that is interesting, is that with the additional $600 that the federal government is offering through the end of July, for people, the way that ESD calculates the unemployment benefits, they look at the average wages of the past, let's see, the 2 highest quarters in the last 5 quarters. So if at the low end, let's say that second line, if someone's receiving 7,000, if their average 2 highest quarters was $7,100, that's the equivalent of $23.67 per month. If they were a full-time worker, that would mean their full-time equivalent hourly wage is $13.68. So their weekly benefit would only be $273. But if once you add in the $600 of the federal enhancement through the end of July, now their total weekly amount is $873, which means their equivalent hourly wage would be $21.83. So if this was a full-time worker and they were getting paid minimum wage, then they actually will get more money being on unemployment than they would be working for you. So that has been a challenge for some employers that have employees that they're paying minimum wage, or let's say up to $20 an hour. Your employees would actually make more money being on unemployment. So it's not a very good incentive for a lot of employers as they try to bring people back on. The employees have said, well, I'd rather get the federal enhancement and make more money, you know, not being back on staff. However, we've asked Employment Security Department what, presumably if you offer the job back to the employee, the question is, will the employee still be able to receive unemployment if they turn down the job that's been proposed, if they've been reoffered employment? So we've asked Employment Security Department to make it very clear to people, if that's the case, that they need to understand if they're offered reemployment by their employer, they will not be eligible for unemployment benefits if they are able to work. Okay, now we're to our last question period. If there's any additional questions out there.
We have one question in the Q&A. If someone is partially unemployed and has reduced hours, and that same person is self-employed and cannot run the business due to the COVID, how should they apply for unemployment assistance?
Graham, do you want to take it?
Yes. Yeah.
Thanks.
So I think that if you're unemployed because of this new situation, you're going to need to wait, it looks like, until April to actually go through the unemployment system. But based on what you were making, we should also be examining whether or not you should be applying for that grant and also the PPP loan to see which one is going to be more advantageous for you and potentially take advantage of both, or just one or the other. So I think that a lot of small business owners or mostly small business owners are going to need to do a lot of math calculations here to figure out what is most advantageous for you moving forward.
So, and one last thing I want to add is that ESD has a sign up, and again, on that FAQ link, it's there. So you can sign up for notices from ESD and you can receive their emails. So you can know when the pandemic unemployment assistance program for self-employed people is up and running, or people that don't have the requisite 680 hours to receive normal unemployment benefits. So I see the last question, what type of businesses would most benefit from EIDL versus a PPP? So the EIDL grant, I assume you're talking about the grant, but if your payroll costs are less than $4,000 per month, then it's pretty clear that you'd be better off getting the $10,000 grant, emergency grant, than going through the PPP loan forgiveness process. It's simpler, it's straight through the SBA, and you would get the funds much more quickly. So, and will an employee working very limited hours still receive the additional federal enhancement, $600? If they have fewer than 680 hours, then they would not normally qualify for unemployment benefits, and so they could potentially qualify for the pandemic unemployment assistance that is available for people. We have that list of questions, like if your business closed down, or if you have to take care of a child who is no longer in school, or if someone in your family has been isolated or quarantined, then they would be eligible for the pandemic unemployment assistance. Okay, so Aaron says he meant the full EIDL loan, not the grant, since you mentioned we can apply for one. So if you want the funds, that's a good question. Brian, do you want to answer that one, whether they should go for the EIDL loan or the PPP, or the PPP loan?
Sure. It's a question of, I guess, how fast you need the money. The SBA has indicated that they will have this money available very quickly. The banks, on the other hand, have still been waiting until tomorrow to get the final readout on what is available and what's not available through the PPP. So if it's not until tomorrow and we don't even know what the application finally looks like, it could be another delay. So if your needs are less than $2 million, and the $10,000 grant would help immediately, I would say the EIDL loan would make more sense. If you want to go for, and time is not that pressing, the PPP might be an alternative. In both cases, there are some forgiveness factors based on your payroll costs and elements like that, rent and operating cost, utilities, etc. So, both have that benefit. Right now, I think it just depends on how fast you get the money and how fast you need the money.
Great, thanks, Brian. Hey, Graham, there's a question here. Based on Graham's reply to my question, it seems someone who is partially employed but lost hours, who also owns a small business, cannot apply for the EIDL grant and unemployment assistance. Is that true?
No, you can apply for the grant and be on unemployment right now, but if you're going to apply for the PPP loan above the grant and then be eligible underneath that loan for payroll costs, the assumption would be then that you would put yourself back on payroll, which would then remove you from unemployment. And how quickly that can be done, if you wouldn't even be eligible to apply through the system until mid-April and it being retroactive, you may be better off with the PPP. And that's where I'm encouraging you to make this analysis and do some calculations math-wise to see what is going to work best for you, your business, and your life overall.
So thanks, Graham. The next is from Jack Heckman. We filled out the original SBA application. Should we also fill out the new form? We've received guidance from the SBA and they say, unfortunately, the answer to that is yes. They want you, and again, this new process is so much simpler. It should only take you about 15 minutes, but because their system, they're using a completely different system, they've requested that you do fill out the new process. So the next is, if I typically hire several independent contractors for jobs that are now canceled due to COVID, should I still count their pay in the monthly average of the PPP loan? And so I think I can answer this. Again, it's a calculation based on what you paid in the past, the average of the past 12 months from the date you apply for the loan. So again, if you apply May 1st, you look from the prior 12 months was the average amount during that period. And then that calculates how much you can borrow from through the PPP loan process. So in the last question, to clarify, if I applied for the EIDL loan/grant on Monday, will I not be able to apply for PPP when it becomes available? And the answer is yes, you can apply for the PPP loan when it becomes available. What you have to do is ensure that the EIDL loan/grant has been concluded, that your application is not still pending. So you can't begin the PPP loan process until the SBA has formalized the plan for your loan. They just don't want something in pending status with the EIDL loan or grant and then not be aware of what that outcome is before you begin the PPP loan process. So let's see, another one, to clarify the new SBA form, was this the YouTube video I watched that you recently put out, or is this the new form to fill out since Monday? No, what you did, the video I did is the new SBA form. It's the online version that's pretty straightforward. That came out on Monday. And from Robert Beebe, is there a way to check on where SBA EIDL application is in the process? I do not know of one. This evening at 4 p.m., if you go to Congressman Kilmer's Facebook page, he's hosting a Facebook live chat, and perhaps he will have an answer to that, or his staff will this evening. I believe that starts at 4 p.m. Let's see. Check here. Yeah, 4 p.m. and that's Facebook, Derek Kilmer's Facebook page. Okay, it looks like we've covered everything and we're 5 minutes over. So I think we'll close this out here. Thank you everyone for joining us, and keep in mind, we will do a couple things. We'll email you the link to have this recording and the slides so that you can get to all the links that we've referenced during this webinar. Thanks very much and have a great day.
Thanks, Colleen.
Thank you.
Thanks, Colleen.
Thanks, Graham. Thanks, Mark and Brian and Lissy and Angie.
Thank you, guys. I'm sorry for my barking dogs. We rescued a new dog last week, and it's been a little struggle, but we appreciate all of your patience.